Stephen Gallo. He's the most accurate currency forecaster according to Bloomberg data. Stephen, good to see you. So perhaps a lack of conviction in European markets this morning, but nevertheless we are seeing some positive tone in the markets, aren't we? How long will this last?
Yeah, I think that's right, Maryam. I think it's a continuation of what we saw develop last week in the euro and risk sentiment overall, mainly a move towards the positive direction, or in the positive direction. In terms of how long it's going to last, I think it can persist until we start to see that brinkmanship between Germany and Greece pick up again. I think that is the main sort of hurdle to be overcome after we get through the bank recapitalizations. You know, the main hurdle is going to be how far is Greece going with these austerity measures, and is Greece going to run out of money again, or are we going to be in a situation where we fear Greece is going to run out of money before the end of the year? But let me just sum up to you what has been happening very succinctly in terms of risk sentiment overall, in terms of the market's positioning in the euro. Essentially, that gap between where policymakers in Europe have been, which is essentially has been behind the curve, and where financial markets have been, which has essentially been ahead of the curve, that gap is narrowing a little bit. And the reason it's narrowing is because we're starting to get more positive comments, or more constructive comments regarding bank recapitalizations in the eurozone, or improvements for the banking system in the euro area.
So, Stephen, then are you fairly positive? Because, you know, the issues that they have to tackle over the next 3 weeks have been challenges up against the eurozone for the past year and a half, and we haven't really seen a great deal of traction on them recently, but nevertheless they say that they are going to deliver at the beginning of next month. Are you confident that we will get an agreement on recapitalizing the banks and shoring up the periphery?
Not 100% confident, but I'm more confident now than I was, say, for example, 2 weeks ago. I think the main reason I'm not 100% confident is because the bank recapitalizations, the numbers that we start to see fly out from the mouths of euro area finance ministers, or indeed the mechanism which is going to be used to recapitalize the banks, the numbers that start flying out of their mouths have to be realistic. In other words, do the bank recapitalizations equate to what the market already sees as a necessary sort of haircut or restructuring for example, Greece's debt? I mean, if the numbers aren't realistic, then we're back at square one again. So I'm not 100% confident, but I'm definitely more confident on the banks than I was 2 weeks ago.
All right. So then, is this having much of an impact on your targets for the euro, or is the overall sentiment still pretty fragile?
I think the overall sentiment is still very fragile. I mean, I think euro-dollar is fairly priced at about 140 in terms of the next sort of 3 to 6 months at least. I think sentiment is still fragile, though, and you can see that. I mean, although the positioning and the CFTC positioning last week didn't indicate a big increase in euro shorts, it still indicated an increase in euro shorts. So that tells you that the market is still disposed to want to sell the euro on rallies, and it also tells you that most of the buying that we've seen in the euro so far has been the shorts, the aggressive shorts, moving to the sidelines a bit. We've not seen the big euro bulls get really back into this again. The euro longs aren't really the main driver for this rally in the euro so far.
All right, we've spoken about the eurozone, Stephen. Let me then ask you about the UK. We've got another round of QE from the Bank of England. What are your expectations for the pound as we head towards the end of the year?
Well, look, I mean, now that quantitative easing is out of the way, I don't expect that we'll see any more this year unless things get really bad in the Eurozone, or really bad for the UK economy specifically. I don't expect to see any more this year. But QE is out of the way now, and if we take what Osborne and the government have essentially been saying about the deficit reduction measures, they're not going to touch that, because then there's the AAA rating comes back into focus, fiscal slippage comes back into focus. So the only real thing left is a weaker pound. And so what I'm waiting to see here is whether or not members of the MPC start to actively talk the pound lower if we see some trouble, if we see the pound really hold up versus the euro because of what is actually going on in the eurozone. So really the last channel of support for the UK economy they have open to them is a weaker pound. And based on the level of inflation we have in the UK, we may need a weaker pound in order to give the UK that boost to competitiveness that policymakers have been looking for here, because the higher inflation numbers are offsetting the weakness in the pound.
Yeah, exactly. And I suppose the key point that you raised, Stephen, regardless of the policies and the measures that we have inside the country, you can't discount the external factors here, the prospect of another recession in the eurozone. So, I mean, given the developments that we've had over the past few weeks, I know that you say that you're a little bit more positive on the banks now than you were when it comes to the eurozone. But what are the chances then of the pound being weaker by the end of the year? Surely it's going to hold up.
Yeah, it's going to hold up as the euro situation, if it continues to deteriorate, euro sterling is going to remain closer to 85 than 90. I think over the course of the next 3 to 6 months, though, we will have at least one more chance for euro sterling to move back towards the 90 level, perhaps in an 88 to 92 range. And the reason I see that as more likely is because we're getting this aggressive monetary stimulus from the Bank of England. It's almost unexpected in terms of the timing as well. And so essentially what this means is that the pound, they're not leaving themselves much headroom here for the pound to be able to rally strongly, either in trade-weighted terms or even against the dollar as well. So I do think we will see a fairly supported pound as the euro crisis remains very, 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 it remains a bad situation, and if it deteriorates further. But I think, we're looking at weaker levels in the pound, perhaps new cyclical lows in the pound once the situation in the Eurozone abates a bit.
Really good to get your analysis. Thanks so much.
Maryam.
Stephen Gallo from
pleasure.
Schneider Foreign Exchange. Good to have you on the program.